Hi, good morning, everyone. We're just allowing a few minutes for persons to join onto the webinar.
Hi, good morning, everyone. All right. So, welcome everyone to our webinar session. Today we have members of the Trinidad and Tobago Stock Exchange and members from the WISE community here today to present to you on the Well Builders under the theme Starting Trading for Young Professionals. So, allow me to introduce myself. My name is Shiva Bisesa. I'm the manager of market operations here at the Trinidad and Tobago Stock Exchange. We also have members from WISE, who we have Adrian Manmohan, the director, Gina, which is the area of vice president for investments, Amrika, and Melanie, who are our investment sales managers. So allow me to start off the presentation. For the first question for young professional, we would ask, what is investing? And let's start off. Investing, according to Warren Buffett, is one of the most successful, who is one of the most successful investors of all time, is laying out money now to get more money in the future. Specifically, in the stock market, it is a process of buying and selling securities with the aim of earning returns on those securities. These includes shares, mutual funds, and bonds. Shares are small pieces of publicly traded companies where investors can buy and sell stocks with the aim of generating income through capital preservation, which is measured by the increase in the stock price, and dividend, which is the portion of the company's earnings. Mutual funds are pooled investments which give individuals access to a diverse group of assets in a single security. Some of you may already be familiar with mutual fund, as you may already have investments in mutual fund from well-known organizations such as Unitrust, for example. But we still need to explain how mutual funds works. And bonds, which is a debt contract between a borrower and a seller. There are usually two types of issuers of bonds, which are government and corporate. These two categories are issued and they are done for the benefit of the bondholder and the issuer. Moving on. Let's talk about the stock market. In the previous slide, I mentioned that investors buy and sell shares in listed companies. These shares can be bought through two ways. One, through the primary market, in which companies come to the securities market and initiate what is known as an IPO, an initial public offering. They are done this in order to raise capital for the company. For example, in 2022, FCB, which is First Citizen Bank, had their APO, which is also known as an additional public offering. After the share has been offered in the primary market, they are then listed on the stock exchange. The shares become available for trading via what we know as the secondary market, where the TTSE plays a bigger role since it provides a platform where trading can occur. Some of the well-known companies that you may already know, and these are categorized based on different sectors. So we have banking, conglomerates, manufacturing, non-banking, property, trading, energy, and SME. Some of the well-known companies in the banking sector may be First Citizens Bank, Republic Bank, Scotiabank. Some of the larger conglomerates will known as Grace Kennedy, Answer McCall, Massey. Some of the manufacturing you guys may know as Whitco, TCL, and there's just to name a few. So we'd ask the question, why invest? And some of the key benefits to investing. Let's go. One, buying shares in a company makes you part owner of that company. Two, shares are assets that can be used for collateral when taking loans or any other pledging requirements. Three, you receive a portion of the profit at the end of the financial year for the company in a form of compensation known as dividends, which are provided to shareholders. And lastly, investors can benefit from capital appreciation. This is where the share price of a company can go up, hopefully, and sometimes go down based on market conditions. Some of the misconceptions that are affiliated with investing. Firstly, most people think that you need a lot of money to start when you are investing. This is not true. You can invest with as little as $100 to $500 when you're starting off. Secondly, investing is exclusively for the wealthy. That's not true. Anyone can invest at any age. Thirdly, high risk investment always yields high return. Always yield high returns. That's not true. Locally, we can see some of the banking sector shares are performing exceptionally well, and these are reflected in their dividends currently. And investing is only for the experts. That's not true. Anyone can invest. So now I'll pass you over to our colleagues from WISE who will take you through their portion of their presentation.
Okay, thank you, Shiva. Good morning to all our participants and to my fellow panelists. My name is Adrian Manohan, and I am the Director of WISE. A warm welcome to our webinar, jointly hosted with the Trinidad and Tobago Stock Exchange. This event, while geared to young professionals, will be beneficial to all investors. We live in volatile times. On the international market, we contend with ever-changing U.S. trade policies and geopolitical unrest. Locally, the stock market has declined for the past 4 years, both in terms of market activity and the composite index, while economic unrest persists. Economic uncertainty persists. As more investment options become available, the risk has increased for investors, especially as there is an upsurge in unscrupulous behavior, such as meme stocks promising huge returns, fake social media profiles promising returns of over 1,000% within a week if you invest as little as $1,000. And I may remind you, there are no shortcuts to achieving your investment goals. It takes hard work, discipline, consistency, and dedication. It may sound familiar because you would have used the same path in achieving success in your career. 2 common sense pieces of advice I have for you when choosing an investment firm. Seek out reputable firms with a proven history in the business. Secondly, start thinking about your long-term financial goals as early as possible. And Rika and Melanie will go into details with how we can achieve those goals. Okay, so how can WISE assist you? WISE, next slide.
Okay.
Yeah. So WISE has been around since 1964. We are the longest standing and largest stockbroking firm in Trinidad and Tobago. We have assets under administration of about 16 billion. We have over 10,000 clients. We offer services in international and domestic equity, international and domestic fixed income, customized investment portfolios, Reutron mutual funds, margin accounts, option trading, and after-hours tradings. Okay, so before I conclude, a word on some of our strengths are, of course, are well known. We have competitive fees. We have over 60 years in the business. We are part of RBC, and we also have a relationship with Pershing LLC. And we could trade, as you know, both on the local and international markets. Okay, before I conclude, a word on investing in the local stock market, which is an attractive long-term investment option. The TTSE continues to strive to make it easier with options such as online trading through the top platform and the e-statement platform. Trading on the top is not only simple and convenient, but cost effective as well. But the TTSE also is striving to increase their listings. The latest one in this SME market being the MedCorp IPO. And most of you would not know, but you are probably invested in the TTSE because some of your NIS contributions, some of the mutual funds you have, and also your pension funds are more than likely invested in the TTSE. Okay, thank you. And now I pass you over to Enrica.
Hi, good morning, everyone. My name is Enrica. I am the investment advisor sales at WISE. So I will walk you through in terms of the investment securities overview. So what I know Shiva would have touched on what is investing and so forth, but I know as young professionals, we still have a lot of questions in terms of what should I invest in, how do I go about investing and things like that. Now, the first important rule of thumb is to define basically your objective. What do I want to achieve? What is my goal? Is my goal to invest so later on I could fund my education, to buy a vehicle, maybe to even buy a house, right? So the first step is really identifying your objective and what is your outcome, right? Then this will help you to determine your risk profile. And this simply means what is the amount of risk that I am willing to undertake for in my investment? Am I conservative? Is it that I want my principal not touched, or am I willing to undertake that type of risk? Meaning you want your principal to be touched. This will be a first guide as to what type of investment that will suit you. Now, the basic investment securities, we have stocks. Now, as Shiva would have touched before, a stock is also known as an equity. It's basically a form of security that indicates the holder has a proportionate ownership in an issuing corporation, and this is predominantly sold on stock exchanges. A stock is more of a long-term asset and tends to be on the more volatile side of investments. It's risky since it can touch your capital due to the market trends and fluctuations. Now, although it is volatile, there are benefits to stocks. So one of the benefits is the potential for capital appreciation. As companies grow and become more profitable, the value of the share can increase, allowing you to realize gain when you sell your shares in that company. Capital appreciation can lead to significant wealth accumulation over time. You can also arrive at dividend income. Many established companies distribute a portion of their return earnings as dividends to shareholders. By investing in dividend-paying stocks, you can receive regular income streams in the form of dividend, which can supplement your overall investment returns. So, for example, I know that Guardian Holdings Limited is actually paying a dividend on June the 11th. So, some companies might pay quarterly, some might pay semi-annually, and so forth. And those are the things, especially if you're looking for, and one of your objectives is dividend growth, you will have to look at the dividend returns of these companies. Another benefit is diversification. By investing in stocks across different sectors, industry, and regions, you can spread out your risk and reduce your exposure to any single company or sector. So when Shiva went through these slides before, he would have shown you different sectors. So we had conglomerates, we had banking, and you would have seen like different companies you could invest in. So diversification and investing in different companies across the board could lead to your portfolio doing a lot better. So because it can mitigate the impact of market fluctuations and potentially enhance your overall portfolio performance. So the value proposition to an investor is for stocks, it's long-term growth and dividend income. Now, another investment security that investors usually look at are bonds. So what are bonds? Bonds are debt instruments that governments or institutions issue to raise capital to fund projects. So in layman terms, it's basically like a bond. I borrow money from you for a specific period of time, and in return, every 6 months, I will give you an agreed interest rate, and upon the end, I will give you back your full principal plus your last interest payment. In other words, of investment bonds are theoretically more on the conservative end of the spectrum. As well as equities, there are benefits to bonds. So bonds tend to be less volatile and risky compared to stocks, and when held to maturity can offer a more stable and consistent return. Interest rates on bonds and treasury bills often tend to be higher than saving rates on your regular bank accounts. They provide a steady stream of income, and bonds can contribute an element of stability to almost any diversified portfolio. They are safe and conservative investments. So the value proposition to the investor will definitely be income preservation. Right. So this slide is the local stock market indices. It represents January 2020 to March 2025. Now, this is a graph showing the performance of the local stock market over the last 5 years. So what is the composite index? The composite index is a tool that groups together different equities in order to create a representation of the overall market sector performance. Right? As you can see, there was a downward trend in terms of the index, which means that prices of assets would have decreased. But this would only be a benefit for the investors, and investors can buy equities at a lower price, and existing investors can lower their average cost. And this was a result, the downward trend was basically a result of, like, for example, the economic downturn from COVID, the Russian invasion into Ukraine, and the softening of the domestic markets. Right, so investing on the Trinidad and Tobago Stock Exchange, right? So as you can see here, the TTSE top dividend growth stock. These are the equities that has the highest payout for the year in terms of their dividend. So the dividend payout is the total amount of dividend that a company pays to a shareholder relative to its net income. And the other graph is the top 10 total return holdings till April 2025. And this basically represents the equities that would have accumulated the highest value for shareholders in terms of capital appreciation and dividend payout. Right? So these are important things that you need to look at, especially given your objectives. So once you define your objective, is it capital appreciation? Is it dividend income? You could use these graphs, and these things can be located in our WISE website. Right. So how is a bond risk measured? Bond risk is the potential of losing money that is associated with bond investments. Each bond given a credit rating assigned by the credit rating agencies like Standard & Poor's, Moody's, Fitch, and they assess the issuer, the government, or the corporate's ability to prepay the debts. The higher the grade of the bonds, for example, like AAA, the lower the risk involved and vice versa. But how does this translate into money for investors? So there's a direct relationship between risk and rewards. The lower the grade of the bond, the higher the interest, the coupon rates, and you will receive to compensate for the volatility, and the opposite holds true. Yeah, so we'll move on to the next slide. So local fixed income trading. So as I mentioned in terms of the bond aspect of it, so some example of local bond issuers are like the government of Trinidad and Tobago, Guardian Holdings Limited, like corporate bonds, and last year we had the National Investment Come that was done by the government of Trinidad and Tobago to raise funds, right? So for example, you will see like the investments, there are different investment sizes, tenor, coupons, the indicative yield. So the yield takes into account the final actual return for the client, taking into account fees and so forth. On the local exchange, the day count is 365 days, whereas on the foreign exchange is 360. So basically, the interest earned would be the coupon, which is the 5.25%, multiplied by the face value, which is the 200,000, and that will give you the interest per annum. And as I would have mentioned before, the interest can be paid semi-annually, and you will get your principal upon maturity as well as the last interest payment. Right? International fixed income trading. Now, international fixed income trading allows investors access to a more liquid bond market. Whether you require sovereign bonds or corporate bonds, treasury bills, we have an experienced team equipped to provide market information, economic statistics, and execution in all major markets at competitive prices. Client looking for a short fixed income securities can also look at treasury bills. These are short-term debt instruments issued by the government, and these bills are offered for a period of 1 year or less at a discounted rates. So for example, if you have a face value of 10,000, you will pay less. Once a year passes, you'll get back the full 10,000, sorry. So the interest you receive for the matured amount is minus the cost, and this will give you your return. So some examples of international fixed income is like corporate issues such as Barclays, sovereign issuers such as USA, and TriTop, which is specific to Trinidad and Tobago. Right. So this exchange traded funds is another investment that young professionals can invest in. But what are exchange traded funds? So exchange traded funds is basically a basket of investments made up of different asset classes, different sectors, etc. in one equity. It's traded just like a single equity, but in that one share, it will have holdings of many, for example, like Amazon, Netflix, Tesla, PepsiCo. So some popular ETFs, you could probably S&P 500, they have Vanguard and so forth, you could possibly take a look at. The major benefits of an ETF is diversification. So it gives you a chance of investing in an equity, but it mitigates some of the risk compared to a straight equity. Otherwise, we do have customized investment portfolios for our clients, and this is a managed account where we invest in structured ETF portfolios, given your risk profile on your behalf. Any dividend or interest gain is automatically reinvested once we rebalance the portfolio every quarter. So there are three types of customized portfolios. So we have balanced income focus, where it's equity ETF is 50%, bond ETFs is 50%. Balanced growth focus, where the equities ETFs is 60%, bonds 40%, and then we have the growth, where it's basically 100% equity ETFs. So depending on the type of portfolio you're looking for, it will all depends on the type of risk that you are willing to undertake. Yeah. So WISE investment offerings. Now, this will be dependent on each broker. So with WISE specifically, we invest in the domestic stocks, bonds, and treasury bills. So the minimum investment for stocks and bonds, it's 25,000. And the minimum investment for governments of Trinidad and Tobago treasury bills is 250,000. For international stocks, bonds, and treasury bills, the minimum is 10,000 US, as well as for US treasury bills, it's US 10,000. As well as for the customized investor portfolio, again, it's 10,000 US, right? And this will depend on your risk profile. Right, managing volatility. So what is managing market volatility? What is market volatility? So this is basically the rate at which prices of investments increase or decrease over a period of time. So the long-term view of market volatility, as you can see here, the market volatility has been erratic over the past 30-year history, but it has been on an upward trend. So the current geopolitical turmoil that upended markets go through up and down cycles, and markets are unpredictable. So you really have to kind of frequently check your portfolio. The more frequently you check your portfolio, the more volatile it's going to feel. So we normally tend to tell clients, like, this is how the market operates. Yes, it will be volatile. So for example, if we take into current market trends, but the whole issue right now with the US markets, when Trump actually put into place the tariffs, you would have seen the markets and the prices started to drop drastically over the period of time. Whereas now, seeing that he actually removed the tariffs for a 90-day period, those prices actually increase. So that you can see directly how market information can dictate market volatility, but you have to remain calm. You have to keep level-headed and understand that this is how the market operates. Right, so what are some strategies to deal with market volatility? So you need to develop a plan with clear goals. Right? You need to focus on time horizon, you need to focus on the plan. So, but we need to look past short-term volatility, right? You also need to diversify your portfolio. Holding a mix of different types of investment security reduces portfolio volatility and can provide a smoother investment experience. And this is the most important thing that I will tell anybody. Do not try to time the market. Equity markets can be volatile in the short term. However, over the long-term period, they tend to rise. Staying invested during periods of volatility can reduce fluctuation over the long term and reduce loss due to panic. Because you would see a lot of people, when even on the local market and the foreign markets, when they see, information come into the mainstream, they're going to say, like, okay, they're going to panic and they're going to sell off, and that's going to cause the market to push further down. So do not panic at all. Right, so that will bring the end of my presentation. I am going to pass you on to Melanie Lawrence, who will take you on in terms of investment strategies.
Good morning, everyone. Thank you, Enrica, for that introduction. Thank you for Trinidad and Tobago Stock Exchange for partnering with WISE to have this session in terms of, giving young professionals like yourself, basically some information in terms of how to navigate market volatility, as well as, my vantage point in terms of giving you guys some wealth building strategies in terms of taking all the information that we would have discussed prior and starting now, basically bridging the gap. Yeah. Right. So as young professionals, your time now is to invest. And, sometimes in my career, I would have met persons, and when you say investing, it's almost as if there's a misconception in terms of what is investing and how is it related to savings. And a lot of people think that they cannot invest. So we are here to basically bridge that gap for you in terms of giving you some strategies in terms of helping you start investing as well as helping you assist with your financial goals, determining what your risk appetite is, and giving you just a snapshot in terms of what instruments may fit that time versus your risk profile. So we will start by looking at savings and investing side by side. So, when you hear savings versus investing, I like to think of savings as something that is short term. So you're putting aside money for future goals versus like education, emergencies, and in financial world, when you think about putting aside emergency cash, you look at approximately 3 to 6 months of your salary for savings in terms of medical emergencies or whatnot. Easy access to money in terms of saving, and that is very important because you don't want to put aside money for investing in terms of short term, medium, long term, and you do not have easy access to it in terms of emergencies that may arise from time to time. So investing now is basically allocating money into assets with the expectation of growth over a particular time period. And I cannot stress enough how time is tied to investing. And once you understand the correlation between the two, you would be more open to what your risk appetite is. You would have a clear financial goal for yourself in terms of the time that you can invest and put this money aside, as well as making sure that the funds that you put aside, if you're open to any risk or equities and stuff like that, that you have that pool of money that you have it open to risk that you could afford to basically lose. Right, so some investment tips. The first thing you need to do is understand the basic of investing. Understand time horizon, understanding the instruments. And then when you understand that, you have to set clear financial goals. I cannot stress enough on the clear financial goals because it gives you especially if you're a person who likes to budget and likes to plan, it gives you a clear expectation in the event that you decide to invest in bonds. You know that every 6 months that you're getting a coupon payment. If it is you have a nice portfolio of some high earning dividend stocks locally, at least every 3 to 6 months, depending on when it's paid, you know that you're getting this income coming in, and then you re-strategize and replan in terms of what you would like to do with the gains of your investments, right? As Enrico would have alluded, you have to control your emotions, avoid panic decisions. So for example, when there was COVID, a lot of persons, because, a lot of stock prices went down, persons were willing to sell. And, we kind of not advise persons to sell. Now, in my role, we can't. I mean, if you want to sell, we're execution only. But the rule of thumb is that when the market is down, it is a better time for you to purchase. And this is a strategy that you can use, especially with the local and international market. When the market is down, once you have the capital, now would be a time to purchase. Now, at the end of the day, if you need the liquidity and you need the funds and you have to sell at this point in time, you can, but please avoid panic decisions at market volatility. Execute adequate due diligence prior to purchasing securities. There are a lot of get-rich-quick scams and a lot of, social media pages and stuff like that. And once you understand, back to the first point, the basic of investing, somebody investing $1,000 and getting $6,000 at the end of 30 days, that is one of those investments that is too good to be true. So once you understand stocks, you understand securities, and you tie them to a general expectation of return, when you see these get-rich-quick scams, I would have to say, unfortunately, you would be able to ascertain immediately that this does not sound good. This doesn't sound, this is too good to be true. And on top of that, before you do any financial transactions or send any money across, you need to do your due diligence. You need to do some research. You need to go to an official website, or in some cases, you may need to visit the physical office. So, I can't stress on doing your due diligence where investing is concerned, right? never invest more than you can afford to lose. Now, some persons, again, would take their savings, their short-term pool of funds to invest in something long-term and, deplete their savings. And I would always tell clients, you have to separate the two. Do not invest more than you can afford to lose. If it is, that, car payments may come up and all these types of things, make sure that you specifically set aside funds particularly for investing. Right, so this graph, I particularly like this graph, and I hope that you guys take a snapshot of this because this perfectly explains tying your long-term and short-term goals versus your low, medium, and risk appetite. And it also shows you what instruments that you can use to build your portfolio. So for example, if you're looking for aggressive growth and you have a period of 7 to 10 years to put aside some funds, this is what your portfolio may look like. You may look at 85% stock and 15% bond. If you're looking balanced, you say 50-50, half of stocks, half of bonds. You're looking for good returns in the timing of 3 to 5 years. Now, at every point, this varies from individual to individual. And again, unfortunately, sometimes it may tie to your age. So the younger you are, you have more appetite to accept risk. Now, if it is you're getting down in age like myself, you may not have that much time that you could afford an aggressive portfolio, right? So this time horizon and risk, as well as the duration of the investment, this is a perfect snapshot to give you a visual representation in terms of if you're now starting off, what are the different instruments or securities that I need to be investing in based on my time horizon as well as my risk appetite. So now that we have in terms of, okay, you decided that you know what your risk appetite is and you're looking for investment type strategies. So here are 4 types of investment strategies that you can utilize. Again, it's basically different person to person. So some persons use growth investing and they focus on companies that are expanding their business for fast rates and appear primed to continue generating impressive results. So this could be local and internationally as well. And again, it ties into your own personal research and due diligence on companies. Using those reputable sites. You can use Yahoo Finance, you can use Market Watch to give you an idea of those companies that you would like to focus on. You look at their balance sheet, you look at their dividend payment schedule. You go back 3 to 5 years, 10 years to see the expectations in terms of the historical growth of these companies, and you make a decision and you use it as part of your strategy. Some persons, dividend investing, their priority is basically investing in companies that give high dividend returns. And on our website, we actually would have done the research for you and compiled the data. So we would have given you the top 10 dividend paying companies. And again, starting off and you need to do some research, we would have already provided that information to you. So you can add a couple of those companies as part of your investment strategy if it is you're looking at using dividend investing strategy. We're going to look at value investing. So this is a strategy that not many persons use, but some of us use nevertheless. So this centers on buying stocks from companies that seem undervalued at the time and based as their fundamentals, again, doing your research in terms of revenue, you have a high profit margin, you as the investor decide to buy some shares or buy some stocks in these types of companies, and you form that as part of your investment strategy. So we have online trading platforms. So we're in a age, obviously, where everything is at the tip of your fingers. So for our international advice, our international platform that we use to allow investors to trade for themselves, we use NetX Investor, and locally we use Top Trading Platform. And both of these platforms would allow you to place trades 24/7. You can view your balances, you can view your holdings, all the transactions that you would have done. You can access quotes for information purposes. And again, you could do after hours trading. This isn't as opposed to contacting us at the office for us to execute trading for you, which we can do, but we always encourage clients to go onto the online trading platforms and do trading themselves. So we're going to focus on what the self-directing trading on the local stock exchange can offer to you. So Top is the online trading platform developed by the Trinidad and Tobago Stock Exchange so that investors can trade securities on their own without having to place with their broker. So no matter which brokerage firm that you sign up with, Top is available to you. And very important to note that the orders placed between 8 a.m. and 12 p.m. on trading days are sent directly to the market. So I have some clients who I would have transitioned onto the Top online platform, and they are very excited because of the vast of information and the power that they basically have on their fingertips to send their trades themselves and buy and sell for themselves, basically. And again, Top can be accessed anywhere in the world via the website link. So if you're a person that you're traveling, but you still want to have access to trade locally, you can do that via this Top online platform. Right, so we are living again in an information, stage where we always encourage clients. There's information at your fingertips so you can build on your knowledge. We are always here to assist in terms of calling and asking some questions. So we have our stock market updates on our website. We have our product offerings. We have our fee schedule, which is important for the investors as well. And we do encourage you that when you visit our website, you sign up for our email blast to receive reports and information, which is done weekly as well as monthly. Okay, so at this time, I just want to say thank you for having us, and I'm going to pass it back on to Shiva to have any questions answered that you will have answered. Shiva, you're muted.
Hi, everyone hear me? Hello? Right. So now we would allow any questions from the audience at this point in time. All right, so we have some questions here, guys. So for the first question, we would have from someone called Sean Suchan, and he asks, as a beginner, what do I look for in a prospectus if deciding to invest or not?
Hi, so let me take a let me take a kind of bird's eye view with regards to that question. So in your prospectus, Sean, right? That's the guy's name, yes?
Yes, correct. That's correct.
Right. So you have to look at basically, what you're investing in. So in my view, as a first-time investor, you have to know exactly. You shouldn't invest in anything you're not comfortable in, first of all. So in a prospectus, you have to look at basic things. For example, what type of company, how long standing this company is, what's the industry, is it in a stable industry, is it not in a stable industry? How key, of course, is the financials, right? How do your financial statements look? Is it a company that's, it's profitable? You're not seeing anything strange on the balance sheet. So you really got to read through those financial notes fairly well. As well as you have to have a good feel for the company in terms of like this company is projected to go somewhere. You have to look at really the trends of this company. So that is how you would really view a prospectus. And I'm assuming you're referring more on the IPO side or even an APO, but that is really, you have to really have a sound understanding of the company. Who is the management? Are they competent people? Where is this company projected to grow? Because if you're looking at a prospectus from an IPO perspective, you really have to make sure that this company has potential for earnings, because that's really what you want as an investor, to ensure that the company has future earnings, both on the dividend and for capital appreciation side. I hope I've answered the question properly for you. If not, any subsequent question we can take.
All right, great. Thank you, Gina. We have a two-part question from someone named Cheyenne. The first question was, what are the typical fees involved in investing through WISE, and how do they compare to other platforms? And the second part of the question, what sectors or companies on the TTSE show the strongest potential growth in the next 2 to 3 years? So I can repeat the first part if anyone would like. What are the typical fees involved in investing with WISE when compared to other platforms?
Enrique, you want to take that one?
Go ahead, Adrian.
No, I was saying Enrique to take the first part, and I will take the second part.
Okay, so concerning the fee structure, on the local end of it, the fees are, so if you go through the broker, it's done on a 3-tier basis. So the first 50,000 is 1.5%, the second 50,000 is 1.25%, and then anything above 100,000 is 1%, plus you have a standard TTSE fee of the 0.21%. Right, so that is on the local parts of it if you getting guidance and assistance on the trading part. If you are trading on the top end of it, then it's more cost effective to the client because you get a standard rate of 75 bips, which is 0.75%, plus your standard TTSE fee of 0.21%. So that's on the local end. Concerning our foreign trading, now this is only specific to WISE and not the other brokers. So on our foreign end, we charge for trades, we charge 0.75%, an execution fee of $30, plus a foreign broker fee of $4.35. Again, if you are trading on your own, then again, it's going to be a lot more cost effective to the client because it's a basic standard fee depending on the tier. It's about $30 US plus your standard brokerage fee of $4.35. But if you are looking for more information in terms of our fee schedule, you can feel free to visit our website. Everything is listed there.
Great,
Okay,
thank you.
Actually, but the second question was on
Allow me to refresh you. The second part was, what sectors or company on the TTSE show the strongest growth potential in the next 2 to 3 years?
Okay, well, and then that's crystal ball, but the main thing about what you look in companies for the growth for the future, especially would be if you if they have growth potential, if for instance they doing going overseas regionally, if they are put the industry there have potential for growth. For instance, I mean, we won't go into specific companies, but for instance, Republic Bank, Guardian Holdings, they all have overseas, Neil and Massey, Answer McCall, they all recently have acquisitions overseas, which and Agostini continue also to acquire companies. So, well, what you look for is the companies that are doing an aggressive growth mode. And not necessarily, that's if you want growth. Not necessarily paying dividends, but look at companies that are looking to grow in the future.
All right, great. So now we have a question.
I'll just add to that, Shiva, for
Sure,
the
no
person
problem.
that have asked the question, what that person actually really needs to do is understand when they have to go through the financial statements and understand what is the projected outlook for that company. So, you have to really get very granular in terms of, what is the companies, as Adrian would have said, what is the expansion policy, like what is going on, in terms of economic growth in the area. For example, if I am a company and I'm expanding to, say, South America, are they going into the right markets to get expansion? So they really have to get very granular in terms of understanding the company outlook code and whether the management is strategic enough to lead it to the next level. And that's really how you pick and choose, this is a company that I believe has potential for future earnings.
Okay, great. Thank you, Gina, for that part. We also have a question from Ms. Samantha Singh Ramota. Hi, good day. What is the least and most amount of shares that can be purchased? And is there a minimum requirement to get started?
Okay, so I could actually answer this one. So there is no minimum share you can buy or maximum. It depends. Now, in terms of the broker, each broker will have a specific amount in terms of the startup. For WISE in particular, to open a brokerage account with us, the minimum is 25,000 TT.
Okay, great. We also have a question from Mr. Alan Bihari. He asked, I bought in the FCU IPO. Do you ever think that the share price will go up from its initial price?
Sorry, which share is that?
The FCB or IPO, whether the client would have asked whether it is, we believe that
Okay,
the
well.
FD share price will go up.
Well, I mean, the FCB has been doing well over the last 5 years. But if you realize the entire market is presently down, so it's not that FCB specific. And as we said before, you go into these things for the long term. I think the last APO was at $50, and the share probably trading between $41 and $42 at the present time. But FCB continues to grow. They expanded into other markets, locally also. So we do, as again, no crystal ball to tell you when it's going to increase again, but probably within the next 2 to 3 years.
Okay. We also have two questions that are lined together. So the first question was, firstly, do you need US dollars to invest in the US market, or do you guys accept TT currency? And we also have another question along the same lines. When you quote investment amount in US dollars, does that mean TT currency will be accepted or only US dollars?
Okay, so let me answer that quickly. So with regards to any US investment, you actually need to have the hard currency. Because WISE does not have a foreign exchange license, we can't take TT dollars in to place in US securities. So basically what you need to do is go to the bank, convert your money, and then come with us, or whichever broker you do decide to go to. But any hard currency security needs to be supported, by acquisition of US dollars or other alternate currency. For example, you can invest in the Canadian Stock Exchange, Australian, whatever, but US really is the standard for purchasing, most securities.
Okay,
But you
great.
need to have the hard currency. We can't take TT and convert it for you.
Great. So another interesting question is, how do you reinvest dividend earned?
So that is basically a broad question. So that would highly depend in terms of your investment profile. For example, that would require us meeting with you one-on-one and deciding, well, okay, again, Enrica and Melanie would have alluded to what are your long-term goals, what are your short-term goals, what are your medium-term goals. So what is critical is for you to decide, well, okay, I am young, as I'm assuming the person is young, right? You get dividends, you should really be reinvesting those dividends in whatever instrument. When you are a young person, you really and truly should not be keeping much money in cash. at all, because and the reason for that is that you have a very long runway to take risk. The younger you are, the higher risk should actually be. But again, this is really very case specific, right? We would need to meet with the person, kind of map out, get an idea in terms of what is their goal, what do they want to do? Are they now getting a baby, or, so it really it's a very case specific. If the person would, say like, what is a specific case, I can answer the question a little bit clearer, but it's highly dependent on what is your objective long term. But definitely dividends should always be reinvested. I also never subscribe to people keeping much money in the bank, because you really get very little in investment return on it. Every dollar you earn should be doing something for you.
Yeah, and just,
right? So,
just to add there, on the local market, there's no specific plan called the dividend reinvestment plans. However, if you invest in the international market, most companies have what they call DRIPs, which is the dividend reinvestment plan. So, okay, thanks, Eva.
All right, so moving on to the another question. How do we know when is the best time to buy and sell? And I'm assuming the person means shares in this case here. How do we know when is the best time to buy and sell shares?
So technically, best time to buy and sell shares is always when the market is lower, or when there's volatility in the market, because it means you have almost immediate opportunity to get capital appreciation, and to sell that share back and make money on it. So really, volatility is an opportunity as well as when the market is down. Now, most people go into panic mode, which is really not the correct way in which to invest. You always buy low and sell high, and not vice versa. But a lot of people go into panic mode. The panel would have alluded to, it's really important to understand the fundamentals and the long-term trajectory. And you take a long-term view, not necessarily a short-term view. If you're an active trader, absolutely, and you understand things very, very well, you buy and you sell and you trade like a guru, absolutely you can do it. But for the average person, you go within a long-term view.
Great. Going off of what you just said, Regina, there's also another question. Is there any course or workshop to learn to trade?
I don't know if there's any.
Don't have any.
Go ahead.
Yeah, Wise doesn't have any particular programs for you to learn to trade or anything. But what I want you to be wary about, because there are a lot of people on Instagram who tell you they could teach you to trade. You could make this amount of money. So stay away from those things. And also, there are a lot of, the SEC, for instance, on their education website, they have a lot of information where you could how to trade and all those. The TTSE has some information, but also if you buy a good book, go on Amazon or wherever you buy your books, and buy a good book. Just Google it and you'll see the top books that are for people who now start to invest. A book that I started with was Intelligent Investor by Graham Dodd. But if you don't want to use that because it's the more modern books, we could I'm sure you can find a good book. But Wise in particular, no thing. But if you have questions, you can call us and we'll be happy to answer.
Okay, great. We have a question, or not a question, but a query from Miss Petal Ramsey. She said, "Good day, I'm interested in signing up in investment, but not sure about the process. Would any of the representatives like to guide me along the way?"
Right, so I'll be able to take this question. So yes, we'll be able to guide you on the signing up process. Basically, we will have some forms for you to fill out, and the requirements are like 2 forms of ID, a residential proof of address that's no more than 6 months old, a job letter, or a payslip. If you are self-employed, we will require 3 years financial and a bank statement just showing the funds available for investment. All right, but again, you can reach out to us and we will guide you along your way.
Okay, great. As a beginner, what do I look for in a prospectus if deciding if to invest or not? And this is from Mr. Sean Suchan. I believe he had a question before, a prior question.
Yeah, I think yeah.
Would have answered that already.
Yes.
Already,
Okay.
Shiva.
He probably pasted twice. My apologies there. How much does it cost to invest in bonds? And I'm guessing they're asking about the fee structure here.
Right. So the bonds are very specific in terms of the fee structure. We will only price the bond once we have gotten the issue. So it's not like equities where it's very specific and it's laid out like a one. Again, it all depends on the bond issue that we get and in terms of the pricing. If it was on the secondary market, the primary market, only at that point in time, we will be able to price the bond and liaise with our clients in terms of the costing.
Okay, great. I am looking. A lot of questions I will answer before, so let me just look. All right. How should young professionals balance between investing locally versus internationally?
Okay, so this is, assuming, well, the biggest challenge we have in the local market is really access to foreign exchange, right? The reality is, if you are looking for bigger returns, the international markets give you bigger returns. Like just, we're not, going security by security, we're talking about on average. So as a younger person, again, you should really be taking on maximum return. So technically, you do need to be pursuing, in my view, both balance because you work in TT, you work for Trinidad and Tobago. You should be, having some in TT and some internationally for sure. And that way too, it helps with your whole diversification and your whole understanding in terms of market, right? So as a young person, you should be, understanding both local and international is in your best interest to do so because you're given, greater access to stuff, you understand the markets a lot more because the reality is the market in Trinidad is largely unsophisticated versus, your G7 markets. So, we're getting there in terms of doing much more. But, from a skill level, definitely you need to be trading international to get bigger returns. Definitely. Again, it's just scale. It's not really, TT. TT has because of a scale issues on our end on the Trinidad market.
Okay, great. We have a top related question here. How do you start trading on top? I'll probably take this one on behalf of the TTSE. So in order to start trading on top, it's very user friendly. You could go online, create your account. However, in order to fund the account, you must have a brokerage account, and there are 8 registered brokers in Trinidad and Tobago, with WISE of them also being included. You contact any one of the 8. Once your brokerage account is fully funded, you then create your online account and you do the transfer, and online trading could happen there. Right. Let me see any other interesting question that we have, and that may not be answered already. Right. Right. Someone named Rion John. With a minimum amount of $25,000 as the initial investment, can this be used in multiple companies or just one?
Right. So it can be used in initial investment is 25, but it can be used in multiple companies. So for example, if you want to split the 25,000 between like say 5 or 6 companies, you can do so. So like Republic Bank, First Citizen, Answer Mical. It depends basically on your preference.
Okay, great. Miss Alicia Dennis had a question. How do you evaluate whether a company listed on the TTSE is under or overvalued? Any basic metrics that
Basically,
Mhm.
so how you evaluate any company? But you look at the financials, you look at the cash flows, but the comparisons that you would see on most websites would be the PE ratio. So the And then also there's a dividend yield. So those are the two comparisons you'll basically see on any listing, price listings. But to get to those, you have for the P ratio, which is basically the price of the share over the earnings of the company, so the EPS. But you could go into detailed valuations by doing the cash flow, looking at the EBITDA, and those things. But for most investors, they just look at the PE ratio that's on their website and the dividend yields, but of course, you always have to look behind because some PEs could be low or high for various reasons. It doesn't have to mean that the company is more has a better valuation. You have to look at what is behind the company. For instance, right now, Answer McCall isn't paying a dividend, but the potential for growth is there because of they're using the free cash flow in order to invest in other projects for long-term growth by buying new assets. Some companies have like Nell has a high dividend, but that is because the actual the price of the share has gone down because of the deteriorating profits of the companies and the associated with it. So you also have to look at all of the behind the scene, not only the P ratio or the dividend yield.
All right. Another interesting question is, what are the most common mistakes new investors make when investing?
Sure, I can go with that. I think the most common mistake from what I see is that people tend to invest based on trends and not do their homework with regards to companies or what's actually happening. So they do stuff based on a TikTok video or someone told them something without really having sound understanding of the company's financials as well as their projected earnings. And that's really, I think that's where people tend not to do their homework well, and then they make the biggest mistakes there. You really have to, I tell you, as an investor, one of the critical things you need to do is really have a good understanding of financial statements. I mean, Adrian would have talked about his first book by Graham Dodd. The reality is, before you even start investing, you have to understand financial statements because that's the base case at which you can understand from where a company is and where, if you track that company, where it has it been growing, what's happening in terms of its debt, what's happening in terms of its structure, does it have the potential to earn? So, that is really the biggest challenge. We see where people, they invest on trends and not really having a sound understanding of the company, the industry, the macroeconomic environment which this company operates in. If it's a multinational like Answer, or your Republic Bank that's reaching out a lot regionally, are they going in the right markets to get growth? What is their percentage of market share? So you really have to get very granular when you're investing. Especially when you're doing direct securities like this. Now, mutual funds are a different space because you're handing over money to someone else to manage for you. But when you're definitely doing direct investing, you have to get very granular in terms of understanding the company and its projected earnings and its future, in other words. Right?
Mhm.
Someone asks, when you sell your shares, how do the funds reach you? Through a bank account, a check, or a special arrangement?
So, Melanie, you can take this one.
Hi, so once you place a sell order for your shares, depending on if it's executed, it will settle in 2 working days, by which we would call you and confirm. We would have your bank account details on file. If it is you want it to be remitted to another bank account in your name, we can do that for you. But once it's sold, within 2 business days, we call you and you give us the bank account details and you'll be able to get it into your bank account. And this is if it is you even use the top online platform, or if it is you just use us and we execute it for you. So on average, 2 banking working days once the trade has settled.
I just also want to interject because some clients may sell some shares to reinvest. You can also have the option to hold funds on your account. So in case that you want to go ahead and use those proceeds to and reinvest, you can do that as well.
All right. We also have another question. Let me just get it one more time. What are the 8 licensed brokers accounts? So I think they're referring to what are the 8 licensed brokers in Trinidad and Tobago right now. So these may be some of the well-known organizations such as Wise, Boss Securities, JMB, just to name a few in this case. Right. Does Wise recommend companies to invest in and based on their financial information? I would like to think that is yes. If you guys provide the material on what companies you may or may not want to invest in.
Okay.
Go ahead, Enrico.
Okay. So Wise is a executionary house. We do not provide advice for clients. However, we do provide discussions with clients. We would have conversations, we could have ideas and so forth. The information that we present to you, the onus is on the client to make the final decision.
Right. Someone said, hi, very informative session. Do you conduct these sessions in private companies or in person, or even when is the next session being held?
Okay, well, I'll leave that up to the TTSE when we'll have the next session. But from our lens, from a Wise lens, yes, we can do presentation to clients privately. We do it. If it's a company, we do go out to companies and present, as well as you also can come in our office if you need to see someone, for I guess guidance or whatever it is you need, but we do go out to clients.
Okay, and they could also visit the Trinidad and Tobago Stock Exchange website for more information on the next session that we may also conduct as well.
Yes.
Right, and stay connected to our social media. We are also on Facebook, Instagram as well. Right. Someone asked, good morning. How are the accounts funded for the brokerage account, especially on top? Is it through a credit card? So no, I would answer. I'll take that question in this case. I think it's repeating. So when you sign up for an online top trading account, you must be registered with one of the brokerage firms. And once your account is fully open with the brokerage firm and it's fully funded, you may then transfer your money onto the trading platform online, which is known as top.
Yeah, and
I just want to interject.
they don't accept credit cards.
So yes, thank you for that. They don't, credit cards are not. Someone asked, can you re-explain the composite index slide? So I believe this was something shared by Melanie, if I'm not mistaken, during the presentation. All right, let me see if I can.
Composite index. Can you go back to the slide?
Yeah, sure. I'm looking to bring it up right now. Right, while I look for it. If you don't have a financial background, how do you understand financial statements or companies? That
Hi, okay, so let me just answer that while you bring up the slide, okay, Shiva? So
Sure, thank you.
if you don't understand financial statements, to be honest, you really absolutely need to if you're trying to go into the investment space. As I said, if it is you don't have the time to do so, or for whatever reason you don't necessarily want to do it, my suggestion is direct securities is really not the type of investment you should be going into. Probably you need to be looking at mutual funds or other type of investments where somebody's managing your money on your behalf, right? So, but it's really critical if you want to get into direct securities to understand financial statements. And in my view, I mean, it's something that's necessary. It's just like, it's learning a new skill. So I would hope that whoever would have asked that question, that you go from the very basics and try to understand it. I mean, thank goodness we're in the information age. You can go on YouTube and you can find basic information, as a start.
All right. You tell me if you're seeing my screen right now, showing the cross
Right.
list.
So I'm seeing your screen. Right. So basically, this is a graph showing the performance of the local markets for the last 5 years, right? So the composite index is basically a tool that groups like different equities in order to create a representation of the overall market or the sector performance. So in there, you're going to have like Republic Bank, you're going to have Scotia, Ansem, Cal, Nell, everything. So it's a pooling of all the results and everything like that. So basically shows you the overall performance of the market. So as you can see here, because you have different you have events and so forth that can actually determine the performance. So for example, the market took a downward turn from since 2019 when COVID happened. So a lot of people probably they were laid off and so forth. So they basically had to like probably dip into their equities and so forth to fund to fund basic daily needs. Or they would have probably want to move their investments from a volatile state to a more conservative state. So yes, you would have seen a peak like mid 2021 to 2022. However, since then, there has been a downward trend. So it basically shows you that the price of the assets of these equities there would have been a downward trend in terms of the prices. And that's why I would have mentioned when there is a downward trend, it's better to start investing. It's a good entry point into the market because you'll be buying at a lower price, or even if you already are investing, you'll be able to average down your dollar costing. Right, I hope that answers your question, but if you have any questions and you're still unsure, you could always give me a call.
Okay, great. Stop sharing. We also have another pertinent question. Good morning. Thank you for your detailed presentation. Can you explain how to access stocks on SME stocks and how do they differ from regular stocks? I could probably take this one. This is the regular SME stocks is the same way how you access regular stocks in terms of you have your brokerage account fully open and funded, and once you could purchase regular stocks, you could purchase your SME stocks in this case. Someone asks, Mr. Mohammed asks, investing is investing a one-time benefits, or do you keep investing continuously?
You absolutely need to continue. You need to be investing actually from the time you start earning any money. Investing is something that you need to be doing regularly, and that way you kind of even out any ebbs and flows in terms of any market adjustments. But investing should be done regularly. In my view, the best way to invest is actually what we call dollar cost averaging, where you're putting in money every month into whatever specific security, whatever specific mutual fund, but that is the best way to actually, invest. And I always tell people, you need to have a sort of paycheck mindset where a certain percentage comes out every month and it goes flush into an investment. But, that is the kind of mindset you need to have. It's a discipline from the minute you start earning money. You need to start putting money in investments. So no, however, what will change throughout a person's lifetime is their risk profile. So if you're young, you tend to take higher risk versus than when you are, pension age or much older, where your risk profile, you will not want to take such risky investments, but definitely investing is a lifetime objective as well. But again, it depends on individual cases. There are older clients that are willing to take a lot of risk. They understand the market, they understand investments, so they do that. But the average person would take higher risk at a younger age and reduce that risk as they age, because they don't want the capital fluctuations. So I hope I answered that. But definitely investment is, honestly, in my view, from the time you start working, you need to start immediately.
All right, great. I would now like to hand you over to our head of communications and marketing at the Trinidad and Tobago Stock Exchange, Ms. Natasha Buller.
Hi, good morning, everyone. And that brings us to the end of the Q&A segment. We would like to thank Wise and the entire team for assisting us with this presentation this morning. Just to recap, this video would be posted on our YouTube channel, Trinidad and Tobago Stock Exchange, For information on future webinars and information on trading and investing, you can find it on our website, www.stockx.co.tt. And you can also follow us on our social media and all our platforms for future information as well, and also on WISE website for their information presented on the webinar this morning. So thank you once again. And as I said, the information can be found on our YouTube channel. Thank you again, everyone. Goodbye.
Thank you.
All right, take care, everyone.
Bye. Take care.